Hello, good morning, friends. I hope you are doing well. Trading overall, I hope अच्छा चल रहा है. Welcome to another video looking at the global equity markets with SD. And I'm SD Shanando Dash, multi-asset trading and investment specialist. So let's start with the market. This is the chart that you are seeing is the S&P 500 or US index or overall benchmark index for the equities. Equities benchmark index is the S&P 500. तो ये एनालिसिस करने के लिए व्हाट वी आर गोइंग टू डू, वी आर गोइंग टू अप्लाई माय ओन फाउंटेन ऑफ गोल्ड सेटअप टू अंडरस्टैंड द डिफरेंट मार्केट. I use this setup, but please note you should not trade based on anyone's recommendations. And also note that trading is not about a setup, it's a complete change of self. So without those ingredients, even with a beautiful setup, you may not be successful. Now, if I look at first, I'm going to look at the overall level of market risk. So to look at the overall level of market risk, I have created a new indicator that is SD Rainbow Wave V2. And under V2 in the settings, one can apply the risk master. And risk master, you can make it large table. And let's switch it on. Sorry, this is the asset master. So the risk master in the daily chart we are applying, we are seeing the drawdown risk has significantly gone higher. In 125 minutes, we are seeing as marginal calmness in the forward risk, low risk time, but overall it remains a bit elevated side, even in the ultra swing short-term time frame. Now with the asset master, now we'll switch off the asset master and we will now hide this line chart. We'll go to daily and we'll start taking a look at one by one different global indices. What is the position of the global indices? And to do that, we'll bring out the asset master. And in the asset master, I'm going to apply the fountain of gold or the mother setup. And then I'm going to apply the SD RSI X to create the 12 factor, 7 here and 5 lower, 12 factor fountain of gold setup. Now what I'm getting in S&P 500, first time a sell signal, since the buy signal was there on this particular 16th of September, looks like buying has come to an end. It did not move significantly, but it is definitely a full exit from the long position based on daily chart. You can see though we have a sell signal, it is a low probability sell signal and the candle is too small, the risk of consolidation is higher. So even if it's not a beautiful sell side trade, it's definitely not a time to hold the long trades. Now we will take a look at the overall equity market. This is SPGM, Global Stock Market ETF. And this has given yellow background, which I use as a full exit. And it has also started showing exit from 30th of September, from where actually the sell-off has started and our risk has started going up on 30th of September. Let's look at the emerging market. Emerging market has done better and largely due to China. The Chinese stimulus, it has been bullish and still continuing the bullish phase. So overall, I'm seeing though the global stock market is in a more down phase, emerging market led by China is much stronger. So we are seeing the EMDM kind of a divergence here. So emerging market looks much better right now for new equity opportunities. Once this is done, we will look at the Asian market. So Asian market, first we'll take a look at our Nifty 500. What to do? Nifty 500 is clearly in a sell signal and the exit has come well before. It has been a bit of sharp sell-off. Lot of support areas is coming. One is the empty line, this empty line which is around 23,440. Also this flat line area which is coinciding with the empty line, this is going to act as strong support. But that strong support does not mean we'll jump to do buy. It means that there could be some bounce backs. overall market is not there to remain on the bull side. Next, we'll look at the Vietnam index. We can see there also significant sell-off after the initial rise, largely because as China is coming back, I think a lot of funds are in from other Asian economies, other Asian stock market is flowing towards China. This is South Korea, significant down. New Zealand, Australia is also not a very great position to go for buy trades. This is just an initial buy signal, buy support. We'll have to see further whether it is coming back or not. So New Zealand can be upcoming opportunity, still not great opportunity yet. Buy support trades 54%. Warning is coming from preferred trades. Though the signal is buy, the preferred trades is a method of do risk management, which is not suggesting buy. That means even if we are trying this, we should try with very smaller quantity. Australia is failing. So Australia, we are not interested. Rather, New Zealand looks like a comeback. So New Zealand will be in our radar. And we will take a look at now into Japan. Japan means Nikkei. Nikkei is more in a range-bound situation, where this is a lower base we have, very strong. And this is the upper resistance around 39,000 to 40,000, 30,900 to 40K. That is a major resistance. So Nikkei is spending more time in the range. The stock that is super strong and that is largely due to Chinese stimulus is the Chinese stock market and the Hong Kong. These are steadily going up without giving any major correction. This comeback was long due. So fund managers are looking for position making into China and Hong Kong. So these indices are on the stronger side, whereas other like Singapore, India, these are not. Money is flowing out. Even if this is not a crisis sell-off, we are basically seeing country rotations. Now with the Asian gone, now we'll take a look at the European market. European market, I broadly remain short. I overall shorted the European market. Now this is Italy. Significant struggling I could see in Germany as well. It's not a sell-off, so that's why I've gone overall short in Europe, not any individual country. So I think overall, given the current situation, heightened geopolitical risk, and the winter approaching, Europe remains under pressure. Europe and also this Chinese comeback, Chinese manufacturing coming back, especially the car, is not a great news for European manufacturers. The one that has been strong is the IBEX, but we have exited from that as well and almost at the top. But when I was exiting, I did not know that it would be the top. Now it has given a sell signal in IBEX as well. So overall, I'm maintaining short position in Europe with this ETF that is called EPV. EPV, and I have gradually, since the signal, first I took a light position. I'm still building up lighter position because the white cross is outside the candle body. As it becomes stronger and stronger, I'll continue to follow the market and I'll be shorting further Europe as I see progress. Now, once Europe is done, I'll take a quick look at the volatility. The volatility is down today. This is positive news overall for the equity. That volatility is down, but I remain overall bullish on volatility unless this previous swing bottom around 20.15 is being taken out or the background turning red. These will be the major signal of exit from the long volatility trades. Now we'll go to American indices, which is basically in the S&P 500. We have already seen that there has been a sell signal. Let me hide the line chart again. So this is a sell signal that is prevalent. So it is low probability we discussed, but it's a definite time not to hold on to the long positions. Equities have not been doing so great. Those who have been following my asset allocation strategy, you already know this. So Dow, it has given a sell signal. Low probability, but a sell signal means it should not be a buy anymore. And those who will be starting off with the sell signal, I always first do with a marginal position. Once the sell-off gets more and more confirmed, then only I go for bigger quantity. And with this kind of small candle, I'm not really confirmed that it is a great sell signal. It is actually not. Sell trade win probability is close to 14%. So it's a very low probability win sell call. Later it may become stronger, but current state, it is a projected low probability sell signal. So everywhere I'm seeing, except for in Asia, in New Zealand and in China, except for these three global indices and except for the overall emerging market, global indices are not looking healthy. Well, there is always will be time when some stocks will anyway be going up. But when the broad market is coming under pressure, you'll have to take note and do risk management. These are the times to shy away from the market, especially from the long side. So ye thoda cheese, if you remember, our trading is going to get better and better. So that's all on the global indices. I hope you enjoyed this small discussion on global equities. And if it's helping, don't forget to put a thumbs up. All the best from my side. As always, happy trading.